Hey everybody, welcome back to Dividend Stockpile. Today we have some exciting news. Yesterday, NEOS, my favorite ETF company, announced the launch of their brand new ETF. So let's take a look in this video. We're going to talk about what the ETF is all about, what type of holdings it holds, as well as what kind of income you could receive potentially from this particular fund. All right, so let's get started. All right, so here we are on the NEOS website. As you can see, they have a bunch of different ETF options. They are known for their options income strategies within their ETFs, but the one we're going to talk about today is a brand new fund that I'm super excited about, that I've been waiting a long time for, and it's their Real Estate High Income ETF, ticker IYRI. So let's dig in and see what it's all about. Okay, so it's called the NEOS Real Estate High Income ETF. It's a monthly payer, and the expense ratio is going to be 0.68, which is in line with all the other NEOS products. If you're not familiar, NEOS also has SPYI, QQQI, BTCI, IWI, NUSI, all kinds of different ETFs that have an underlying security or group of securities, and then they also write and sell options on them. So we're going to go into IYRI today. So scrolling down a little bit about the particular strategy, it says the fund seeks to distribute high levels of monthly income through a data-driven call strategy on ETFs that seek to track the Dow Jones U.S. Real Estate Capped Index. In addition to that, it's actively managed, and so they're going to be offering potential upside in addition to the dividend by having high monthly income from the option strategy. And it says the fund may offer efficient exposure to a portfolio of U.S. listed REITs with an enhanced layer of monthly income potential packaged into a single ETF. And that's what I really love about NEOS, is that they do a lot of the work for you to provide you that high income without you having to do it yourself. Okay, so the investment objective is pretty straightforward. It says the high income ETF seeks to generate high monthly income with a potential for equity appreciation, which is pretty straightforward for an ETF. So let's look through some of the fund details. It just started yesterday, 1/15/2025. The ticker again is IYRI. We talked about expense ratio. At launch, it had about $1 million worth of assets and 20,000 shares outstanding. So obviously that will go up over time as more people invest in it. And just full disclosure, I did make my first purchases of this ETF yesterday on 1/15. I was able to add about 65 shares to get my position started. Again, I was very excited about this fund, and I love the methodology that they use. So this is going to be one of my core holdings going forward. Switching over to the prospectus, to give you a little bit of a better idea of what the fund's all going to be about. We talked about the basics, but really what it's going to do is they're going to invest in the underlying holdings in the ETF IYR, which is the iShares US REIT Index. And what they're going to do is they're going to buy the individual securities. So they're not going to buy the whole ETF, but they're going to buy the underlying securities within that ETF. And then they're going to do call options on IYR, which is, again, the iShares Real Estate Index Fund. All right, so looking at that, 80% of the fund is going to be focused on real estate companies. They're going to focus on the companies within the Dow Jones U.S. Real Estate Capped Index. And if you look on S&P's website for that particular index, it's really the exact same as IYR. So that's the only ETF that tracks this particular index. So it's all really one and the same. And they're going to use the call option strategy to generate high monthly income. And they're going to do that primarily through writing or selling call options on one or more ETFs that track the index. So again, that's going to be IYRs, what they're going to write the calls on. All right, so looking a little bit further along, their primary function or primary method of generating the high income is writing cover calls. But there's an occasion that they're going to purchase calls as well to provide upside potential. So when you do a cover call, you're capping your upside to whatever the strike price is of the option. So let's just say the underlying IYR is selling at $92 today. That might do a call option at $95. With that, they get the upside up to 95, and they receive the premium right now. But if the index or the ETF, goes over 95, we don't get any more of the upside. So to negate that, there'll be times in the market when the managers feel like it's an appropriate time, they're going to buy call options on IYR as well, so you'd still get the upside potential. It's going to reduce the amount of income we receive today because you have to pay for that option, but it gives you more upside potential. So they have the option of doing both. From my last conversation with Troy Cates, the portfolio manager of IYRI, as well as all the other NEOS products, They intend to do about a 45-day call strategy, but we'll have to see exactly what that looks like once the fund's been around a little bit while longer. But that's usually what they're going to be doing, is about 45 days out. They're going to write a call and then collect the premium, and then hold the underlying securities and collect the dividends on those, as well as the capital appreciation on the underlying securities. Okay, so going from the prospectus over to Seeking Alpha, which is one of the best resources for researching different stocks and ETFs. This is IYR. This is what they're going to be writing the call options on. As you see, as of this morning, it's live. We're operating during the market day, so it might change a little bit, but the underlying is about $92.12 per share. The current yield on the underlying IYR, which is what they're basing this particular fund on, the yield is about 2.61% a year. So not too bad, pretty standard for your real estate REIT indexes or ETFs. But what's really going to be great on this particular fund is, in addition to holding the underlying securities, they're going to be writing those call options. So pulling up the initial ones, they have 2 call options outstanding as of the launch date. One is for a February 21st, 2025 covered call on IYR at $93 strike price, meaning that we get the upside of that particular option up to $93, but if the ETF goes higher than that, then we miss out on the upside. And they also have one on 2/21/2025 at $95 strike price, so a little bit more upside. They have a total of 41 contracts per option that they did. So you're going to basically take 100 times 41 for each one. And because they sold them, they received the cash premium up front, and that gave them $1.54 per contract. Per share when they initiated that $93 call, and they got 78 cents per share for the 95 call. So again, 41 contracts times 100 shares per contract times $1.54, and then times 0.78. So when you calculate that together, it comes out to about $9,500 in initial cash that they received for writing those call options. The total portfolio started with about $1 million when they launched, so it was a little bit over 0.95% of the portfolio they received in cash premium upfront. Okay, so now that we know that, we can do a couple calculations on what the yield may look like. We won't know until they announce their first distribution, which should be around the 22nd of January. We'll get to know exactly what the initial distribution is. But just as a quick on the napkin type of calculation, I wanted to run some figures. Okay, so now that we have the basics on what the fund does, I want to go ahead and do a quick calculation, an estimation of what the distribution will likely be for this first month. Now, we won't know for sure until they do the declaration, which is going to be about January 22nd or so. We'll know exactly how much we get for the first month, and it is a variable distribution based on the options premium and the dividends received from the underlying holdings in the REITs that they hold. But just for estimation purposes, we know that IYR is trading about $92 today. And we know from the contracts that they sold, they received about $9,500 in initial premiums from those 2 contracts, the 2 sets of contracts. So the initial return on that was pretty good. It's about 1.16% of the fund's assets is what they received in that initial premium for the one. I remember when they first started, they had about $1 million. Okay, so we know that those basics, and so we know if they get 0.95% on that initial contract, but we talked about it being a 45-day contract. So if you break that down, that comes out to about 2 cents a day is what they received from that particular contract. And because it's a monthly distribution, we're going to do a 30-day period. So we're going to get about 0.63% a month from the options. So it doesn't sound like a lot, but once we calculate the total figure, you'll see that it's not too bad. And also we have the potential for capital appreciation up to the $93 strike price as well as the $95 strike price. Okay, so that's the options itself. Now we also have the dividend. The dividend we said was 2.61% on the underlying index for IYR. Divided that by 12, it comes out to about 0.2175% a month is what you're going to get for the dividend. Now, again, that's going to vary month to month depending on which underlying holdings pay out, but this is just a rough estimate. So if you add the 0.63, and the 0.2175, you're going to get about 0.85% a month between the options and the dividend. Whoops. And I would be nice if I could type. Okay, so that's per month, so not too bad. And then you have to, of course, multiply it by 12 months of the year because it is a monthly payout. So we're looking at an estimate of about a 10.21% annual distribution. This is a relatively strong distribution. Remember, IYR, the underlying REITs, only do about 2.5%. So you're getting an additional 7 to 8% annually based on the options selling. Now, again, if you know anything about options, it is very depending on the volatility of the market and the premiums the buyers are willing to spend. But around 10% is probably realistic. So maybe 9 to 11% range, which is actually quite in line with some of their other ETFs. They have SPYI and QQQI. They're a little bit over that. It's about 11 to 12%. And then you have things like Bondi and CSHI, which are more of their cash and bond portfolios. They're getting in the 6 and 7%. So 10% yield on a ETF that holds real estate companies is very strong, and it's going to provide that great income that a lot of us income investors are going to need. Now, again, this is no guarantee. This is just a quick on the behind the scenes calculation of the initial estimates. Once we get the first distribution, we'll know for certain. All right, so again, I purchased IYRI the day it came out, and I plan on continuing to add to my portfolio. I'm probably going to make this about a 2 to 3% holding of my portfolio going forward, and I'm really looking forward to getting to see how this particular one performs. If you've watched any of my videos, you know that REITs are very important for my income strategy, so this fits in perfectly. Now, we will get more information later in the month, and I do have scheduled Troy Cates, the portfolio manager for IYRI, to come back on the channel and talk to us more in detail about this particular fund. But I wanted to provide a quick overview and initial thoughts on this particular ETF and a quick calculation on what I think the distribution could be. Thanks for watching, and remember, keep stockpiling those dividends.